Hey everybody, DayTraderRockStar here with you with a market radar and an update to the HPS watch list. It is going into Thursday. First of all, happy Valentine's Day. It is what a good week this has been. It's been a bounce back week. It's been something that we were looking forward to. All the signals are out there. I mean, this is I'm so excited when I see the markets react to the way the methodology points to that direction. We had a clear-cut divergence that happened in the markets. This is where our momentum has shifted before the price made the lows. And this is our strongest, by far our holy grail of signals that we want to always trade. And it was right over here. This is why we went into this week looking for a nice bounce, and probably a significant bounce too. It's already gone up a lot from the spike down lows and then the reversal. Everything looks good. This is what we look at, every day, the big picture, the daily chart. Where's our bigger picture looking? Right now, the big picture looking further upside. We have momentum here, drifting higher. I'm not going to go into education on the divergence. If you want to find out more about divergences, come to Day Trading Radio and learn the whole methodology there. You'll make a lot of money. So, today I want to do a couple things. First of all, I want to make the announcement that we'll be at the trade show in New York City, the Traders Expo next, not this upcoming weekend, but the following weekend, the 25th, 26th, and 27th. February 25th and 26th, basically it is. There's a trade show. It's a free trade show down at the Marriott Marquis. We'll be there with a booth. I'll meet all the members, meeting the non-members. I'll be doing trading down there. We'll be doing a trading competition. Seems like I always get pulled into these things. And then we're also I'll be doing a webinar, seminar, stand-up instructional thing. One I think it's on Monday. I don't know. I'll break that stuff out in another video. The important thing is just talking about tomorrow. I want to get people set up for tomorrow. All these setups that I send out go out to the members of Day Trading Radio. I don't put the public videos out as much as I've been doing. It's just been, the market's been so busy and it's just been so much going on that it's just amazing. The range we've been seeing, the amount of movement, everything working well. I mean, yeah, the market did drop down. A lot of these stocks came down with it. But, that's to be expected when we do have this. And this could have actually been something that was caused by, we're saying that interest rates were causing this. But I might even think that the volatility, indexes that got turned upside down, and the whole issue with volatility over the last week was even rumored to be caused by people manipulating the markets. And if that volatility gets manipulated with, well, then you're going to have these huge moves, and this is what's going to happen. So this might not have been interest rates. I mean, it's definitely put under the magnifying glass. Either way you look at it, the moves have been just the historical. We had a historical drop of like 1,500 points the other day. And even though it didn't register as a big percentage drop, we do get those ranges. And when you think about trading the ES or the NASDAQ or the YM, just think about being on the right side of one of these trades. It's amazing. So let's get into it. I want to actually do just kind of a fast update. Friday, the new watch list goes out for the members. All these stocks should be on the watch list with their targets and alerts and everything. But I'm going to pull them out here, just show you what I'm looking at, give you an update. If you're a member, you're going to get, remember these things all get in the automated alert system. You get the emails when we buy them, sell them, and if anything goes wrong with them, you get the email also. All right, so let's just start going through a couple of these stocks. This is the list I have so far set up for this week. Now, since we have a big divergence in the market, it makes sense that we're seeing a divergence in a lot of different stocks, and that's the key there. So we have, it's like a candy store out there right now with the divergences. It really is. I mean, Apple, we traded Apple on a divergence. Apple, one of the cleanest looking divergences out there. And see this higher low and just beautiful. And the lower low on the price. I mean, that was your textbook divergence. Unbelievable, just perfect. A lot of people made a lot of money on that, and it still looks pretty good. I mean, I would say that this trade is now, coming to an end, or risk reward starts to level out and maybe even head over to the risk side a little bit more now. But back here, this was our trade. So again, that still looks good, but that's not the one we're concentrating on. Let's go into the first one. The airliners. LUV is really my true pick. I love this one the better. The rising trend line. I always like a rising trend line and a divergence combination. So it continues to look good. For some reason, I got into the ALK because I also like the pattern here. We have this kind of a downward channel. We just broke out of it, and we're holding above that trend line. So I think either one of these are good, but the LUV has a little bit more positive tone to it because it's working on a series of higher lows, and that's always more positive. But overall, I do like the airlines going forward here. So we'll probably break these down. We'll give these another day to kind of set up, but you can see the 60-minute on the ALK pulled back. I would like to see a nice bounce in this tomorrow. I don't say this is my best bet yet, but definitely holding on to. We got out of the INCY because the earnings were coming out tomorrow morning. But I'd be curious to see what happens with this. This was a divergence. Well, was this? Wait, hold on. There it is. There's a little divergence with a nice reversal candle and a nice trend line. We go out that trend line. You'll see it on the weekly, actually. That goes all the way back here to 2013, 2016, and then right here 2018. So it's a huge trend line. Now, earnings, it could gap down, it could gap up. I just didn't want to be part of that during earnings. I hate just taking what we work so hard to identify and know and learn, and we know what momentum is. We know how to identify a buy signal. Sometimes it's hard to just throw that all out the window and just go with an earnings setup. So I got out of this today. KMB, and here comes our consumer, what do we call consumer defensive sector. Personal products and stuff. Very organized in their way they trade. I like trading these because they're very organized. They work great with trend lines. This one is blue trend line, top trend line, bottom one. We kind of blew through it a couple times. So we're looking at this. I want to stay with this original 1, 2, 3 pattern, and considering we're chopping around here, I'd like to hold this lower trend line and push higher. Once we do push above this downward trend line, say today's highs, or we'll call it 113.55, 113.55, somewhere around there. Probably take that other candle and get it going. And I'd say we'd have a buy trigger on this. So we'll probably have this on the watch list of the buy trigger. We'll call it maybe 113.90, a buy trigger. And that should, get the momentum going here a little bit more on the daily. Once that momentum really drives up here and gets through that 50 mark and we have a real strong, that's when we start to see those bigger candles grow. Excuse me for my little cough I have. But not in really not really that focused with it. The ones that we're focused in here right now is EP. Let's see what this EPC is. This EPC. Oh, these are the ones I wrote down today. That was the insider buying. The tight stops gave us. Look at that insider purchase on that. That's a big explosive move up higher. EPC, another consumer defensive sector. That actually looks pretty good. I've never traded that before, but these are the ones we're just paying attention to. But the AGN. I'm going to go with this with my best bet tomorrow. We're off the lower trend line. It goes back to last May 2016 with a gap down. Came through it, hit it perfect here, hit it perfect there, hit it perfect right there, hit it perfect there. And again, we hit it again, and we have a divergence. Higher low on the stochastic. Pretty decent one, even though it's not taking out that 20 line. A big candlestick. Volume was great. This is a combination of upside here, plus kind of a wedge type of pattern. A lot of things working for us on this. So I guess going into tomorrow, this is my best bet. We're already in it. I'm not in front of my office computer, so I don't have all my positions in front of me. But we're in this one on options. Options on this one, right? So that's that. This one might even pay your way to New York to go to the trade show. The other, Procter & Gamble's the other one I'm in. And I tell you, it's been a dog. It has been a dog. I mean, it hasn't really, but I'm still comfortable with it at this level. There's a good level of support back here. It's just choppy around here. It hasn't, you know, it could pull back a little bit further. There's a decent candle, but I'm hoping for a push back up. I've been cost averaging down in here. So, I mean, I think my cost average is actually around 84. I think 83 or 84. So I'm down a few points on this, but it's right here. It's basically we're chopping around. We should get that rotation back up. I'd like to see that happen tomorrow. I'd like to see the whole consumer, defensive sector move, because that would move our Kellogg. And Kellogg, again, another nice organized trade. We've been in and out of this one multiple times, identified divergences on it, channel retracements, oversold stochastics. All these are just trade zones. This last one right here, but we decided to hold on to it. And we're looking for this to break out. And you can see it's consolidating here. And, holding that new trend line. If we extend this trend line out here, you'll see that this probably goes out. Just for argument's sake here, and just kind of look at it this way. So we're looking at a target up on this one on the Kellogg, getting back up above $70, 71. I think we're looking at that, yeah, $70 to $71 on this Kellogg. And then the Mondelez MDLZ. We did have some news. I tweeted out earlier. You can follow me on Twitter at DayTraderRockStar. And I did tweet out this earlier that I think it was Ackman. Let me see what I have here. I'm going to have to go to my tweets. Pershing Square, Bill Ackman discloses update portfolio positions in the 13F filing, affirms new Nike position and increased Mondelez position. I remember he got in this and he's been consolidating. He thinks it's going to be bought out. We traded this one off of this little divergence back here. And then we ran it up. We traded it out of here. We popped it. It came back. We got back into it, right? Yeah. And then this is the area we like. This is the midpoint of this rally. Definitely thought we were going to break out of here, but then the market got, just got turned upside down with the volatility and everything. So all these stocks pulled back. But because of, the long consolidation here, we had something going for us, and we turned around fast. I think we move right back up there, and we eventually take out the highs here. Insider buyers coming in here. This is a good level down here. Midpoint of this long, big consolidation. It's right on the 200-period moving average. It's acting fine. The stochastics are starting to curl back up. The weekly, nothing to look at. I mean, it's pointing down, but I won't put too much into that. Hourly is kind of set up for a little pullback. But overall, I think we move higher on this one. I'm going to keep my eye on American Tower. I'd like to get into this. If it was a divergence, I would love it. If it was something, it's choppy. It does look good here, though. This is actually, there's your breakout. Here's your rotation or your first pullback out of a channel breakout like this. And typically would come back to that trend line and bounce. But because of the market sell-off, everything kind of flushed out. So these things tend to come back into their, into the norm and start to perform just as they would. And this ends up just being, kind of an, an anomaly, so to speak. So the stochastic still pointing higher. Again, like this one a lot. I think you could probably get in this one. I haven't picked the spot yet, but it is looking good. And then we have this is an interesting one. The IFF, the pullback here. It's kind of a divergence here. We started seeing that little shelf a couple days ago with this lower low, and of course that divergence is working out pretty good. International flavors looking pretty good on that. SeaWorld has continued to push higher. We're still holding on to it, and we're looking for a buyout on this. And I think that's going to be it. I just want to do a fast update. The best bet tomorrow would be AGN. that drug company. Then we'll be looking at Procter & Gamble to see if we get that move. Don't forget ALK. I know I'm missing something. I don't have all my notes in front of me because I'm at my home and not at the office. And I wrote down some notes and I left them at the work. So I'm missing a few stocks on my update. But we'll discuss those bright and early in the morning tomorrow. I'll be on the air at 8 o'clock. DayTraderRadio.com. And futures are higher right now. They're up 6 1/4, looking pretty strong. Let me see if I could actually see that. Yeah. Cisco was up a little. Applied Material here, it's actually trading a little lower. Oh, Kraft, KHC. That's the other one. All right, so I almost forgot that one. I was like, oh my God. All right, so let's go to the KH. That's a new position. Already making us money. Picked it up on the lows. It was a very gutsy move. It was selling off, and right at the end, I said, let me get in here. But what if it breaks down? I used to be, when I was trading back in the 90s, I was just learning the craft. I'd read a lot of books, and we talk about the support and resistance lines. And I think I was looking at, when you look at the market in a certain way, you sometimes have a subjective point of view. Something you read a long time ago sticks with you stuff. I was always taught, support and resistance. If you break down through support, then automatically it's a sell, and if you break up through things, and then there's bounce zones and stuff. So that could, we know that doesn't work exactly like that. People put things in books because they need to fill the pages, and nothing works, 100% all the time. But I do believe in these support levels and stuff, and that's your area. That's the hard area to get in, because lots of people think that, all right, we're going to break through and we're going to just head lower, or we're going to bounce. So it's a tough call sometimes when you get down there and you're selling off. You're into support, but you could easily blow through it. And again, but we had things working for us. We had that 5-minute time frame oversold. We had the 60-minute was choppy. It wasn't oversold. It was pulling back down. Where it was turning over, but anyway, look what happened. It turned back up here. We broke out. It was very nice momentum. The daily candle looked pretty good. The volume here picked up. We're starting to curl back up. It's been a while since we moved back up. So all of a sudden the craft is looking really good. So we already got a good profit in it anyway. But I would like to see this the beginning of a nice move back up to the 20-period moving average, wherever that would be. But we'll say 74. 3 points on that. 74 to the 75.50. I think that's a good trade. That's just in the first stages. I mean, I honestly do think that this one heads back up 80, 90, down the road this year. This will be higher, but excuse me. We always start our trades. We always look back at our trades. Oh, you remember this one? Yeah, we got in on this divergence right here, and we got it right here, and then we look back, and it's another 100 points higher. Not in this case, though, but a lot of the cases, we'll get out right. We'll identify the perfect spot, and we'll get a few points on it. We'll get out. Yet, if you continue to look, it went up much higher. So it's kind of difficult if you want to play that game. You want to play the easy money game, get 2, 3, 4 points on this, maybe 3, or do you hold it long term and start to build a position down here and just wait for it? So that's looking pretty good. Craft. So I'd also look for a follow through on that. So Procter & Gamble, KHC, the AGN, number 1. Celgene. Oh, almost forgot the other one. I'm looking back at my, I'm doing my team viewer. Celgene, same thing. Got in on a divergence. Got in, what was he getting yesterday? Nailed it. Absolutely friggin' nailed it today. Now, a lot of people took some profits. Your hourly is kind of turning over, but remember, this is your first divergence. And remember, this thing dropped out here. Look at this big drop down. A big gap down here. I don't know, something with their drug. I don't know exactly what was going on here. This is my weak link in this, knowing some of these drugs, but I did look into it. They own Botox, I believe. Some other crazy stuff. Some injectables. And there's another big gap down right here. So you had a big gap down and a consolidate, another big gap down, and that level right there, I want to make a horizontal line. This low, we took out the low. So we really flushed, this stock has flushed quite a bit. Especially we took out these lows here. So everything looked good. Now we had a slight divergence. So a little slight divergence, knowing we flushed this. So yeah, I like to come in usually when there's a flush, knowing that there's usually a bounce back above that line that fakes everyone out, especially if there's a divergence, But don't, this one might disappear tomorrow. We'll get a nice pop on it. Love to hit a home run with some of these. I want some good news to come out on this thing to gap up 10 points. That's what I need. But we're in the right stocks. You can see we're nailing the bounces. We're nailing these bounces. The hardest part, I always say, of trading the HPS methodology is when you're going to take profits. That's the hardest decision you're going to have to make. The criteria for entry on all these setups are so defined. They're defined in the playbook. On your dashboard, you go up in the top there, you'll see the DTR playbook. Each one of those setups is defined in the video, little educational video lesson. And then if you're not a member, you can get the course. And you get a more expanded course at the School of Stock also, theschoolofstock.com. So if you want to check out those courses on divergence trading, how to spot them, and how to set up your whole trading business. Your trading business, because that's also something that's very important you to understand, that you have to have such discipline in this game that it shouldn't, you have to force yourself into a way of trading that defines everything. It's you have a set of rules. You're not just playing it. You're not a wild cowboy out there. We all like to be that, and some people are. But when you have, there's a, having a business behind it, it works. Believe me, I've done them both. And if you're organized and everything about your thing, and you just, it helps your second guessing. You stick to your game plan. You see it work. That mentally really is what you need, is the mental game. When that works versus doing something so random that you're not even paying attention to it. You're getting in and getting out of things, momentum, and not really even taking notes or anything. You don't know what works, so it's always a stressful situation because you're not using a set criteria that works, because you keep on using it working, it keeps on proving itself, and that's what the HPS is. So anyway, that is the video. Hope you enjoyed it. Come back to DayTradingRadio.com for more information and everything, and watch the show daily. Daily. It's always on 24/7 covering the markets, but I'll do the market commentary between 8 o'clock in the morning and 4 o'clock, the close Eastern Standard Time. So we'll see you then.